Look, it's been a tough year for investors in general, but mutual fund managers have also had it tough. And we'll talk about a few segments and you'll see what I'm talking about. Let's start with the largest segment as of November, and that's the Flexi Cap category. And remember, this is where the fund manager gets a blank slate. They can go wherever they want in the market to pick their funds. But the schemes that have done well, and you'll see the return profile as of last Friday here, this more or less will give you a perspective of the full year. Then the ones that have done well are the ones that actually have a large cap focus. And that's because the broader markets have actually underperformed. On the flip side, you see the ones that have underperformed, and there is a significant underperformance. Samco, a relative new entrant to the mutual fund space, has underperformed in a big way. This is a decline of 19.5%. and an underperformance to the benchmark of as much as 26+%. And that's because they have a very concentrated portfolio and the selection of stocks is not done very well for them. Let's take a look at the Multicap fund, and this is where you see the impact of the large cap bias for some of these portfolios that have done well, because the Multicap requirement is to have at least 25% allocation towards Midcap and a similar allocation at the very least to the small cap space as well. As a result of which, the best performing fund has only done 7.9%. And it's not very much if you think about it. Inflation, of course, was at an average of 2.5% or 3% or thereabouts, or even less. So you've beaten inflation, but it's nothing really to talk about in a cheerful manner. On the flip side, the losing end, you actually have Samco once again that features in this list and is down about 8%. Again, portfolio selection seems to have gone wrong for this mutual fund scheme, but a few others as well that have played momentum in the past, that have done really well in the past, have not done well in 25 because that momentum was missing. Take 4.3% declines for the Quant multi-cap fund as an example for that. Let's take a look at the small cap space, and here's where there are a lot of talking points, because you have actually, these should show up in red because there are actually declines, but you have two schemes in the entire category that have positive returns. Quantum, which is actually pretty conservative, even in its small cap selection, that is up about 3% or so. And you have PGIM India that's just about nudging into the green territory. But most schemes have actually lost money over the course of the year to date. But the good thing is that 21 schemes in the entire universe, it's a little over 30 schemes, have actually managed to beat the benchmark. What that means is that the benchmark has actually lost ground and these guys have lost less than the benchmark. In the mid-cap space, all but only 4 schemes have actually managed to beat the benchmark in the year-to-date period, and these are some of them. ICICI Pru, once again featuring in that list, 9.3% gains. Mira Asset doing particularly well as well. Invesco India and HDFC Mid. On the flip side, you have a few that have stood out as bad performance. Very interesting, Motilal Oswal, that actually ranked among the top gainers in 2024, has not done particularly well in this particular year, that is 2025, down about 10.8%, and you've seen some of the selections that they've done that haven't done particularly well for them, the worst performer, but you have 2% declines for HSBC as well. Just going to close out with the flows into the category because these have been robust. Let's look at a few of these schemes that I've mentioned, right? On a consolidated basis, you have actively managed equity mutual fund schemes that have gotten inflows of over 3 lakh crore rupees. And quite a bit of that has come through in the form of SIPs. You've had record numbers on a monthly basis quite a bit over the course of the last few months. 3.2 lakh crores into active equity. A large part of that, 70,000, nearly 71,000 crore into Flexi Cap, and Midcap and Small Cap have actually gotten reasonable inflows as well over the course of 11 months. As much as 80,000 and 89,000 actually crore going into the broader market. So really the question is, where do they deploy? Where do fund managers deploy? They've had to gravitate more towards the large caps because of the underperformance, guys, of the broader markets. And that really is something that you will take into the new year. Perhaps you will see some of these broader market funds once again perform. At least that will be the hope of the investor.
Well, yes, that's the hope. And as the saying goes, mutual funds sahi hai for a lot of investors who are there in the long-term basis. But Mr. Chokalingam, I would like to take this entire segment only which Alex was discussing, the AMC stocks. That's something which the street is especially bullish on a long-term basis. ICICI Pru, AMC, IPO, the subscription numbers were at record levels. If you had to pick something from this space, which AMC stock would have a better risk-reward ratio right now, and what would be your view on that?
Certainly, there is no doubt about the long-term prospects of AMC stock. All of us know that there is a possibility of doubling the AUM of the entire industry in the next 5 to 6 years. But short term, I expect a little more pain. There is a possibility of at least another 5-10% correction can happen because even yesterday, the media report saying that regulators are looking at cutting down the fees. I believe if we have to reduce the the power of FII, we have to grow further the local book, and that means taking the AMCs to rural and semi-urban area and cut down the cost of investing, and that is likely to happen. So, however, still, if I have to buy for medium to long term, I would go with Nippon Life, and for that matter, even ICICI Mutual Fund.